Good morning, good afternoon, and good evening, folks, depending on whatever time frame you guys are based in. This is Naeem Aslam from AvaTrade, live from London. Welcome to our weekly masterclass, and in today's segment, we are discussing about how to trade stocks. This particular masterclass is going to be based on the opportunities that we see in the stock market with respect to risk to reward ratios. So first of all, I thank all of you for taking the time out as always and coming out and attending this particular webinar. As always, what I kind of wanted to do is to make sure that I ask few questions so that you guys, so we all of us, we can work together. So first of all, what I kind of wanted to do is wanted to ask you guys if you can see my screen and if you can hear me perfectly well. Well, if you can, then feel free to say yes. Okay, great. So I get a lot of yes already, and so that means everything is working well. So a little bit about myself. I come with a wealth of 15 years of trading experience. During this time, I have worked as a hedge fund trader for Bank of New York Mellon, Bank of America. I've had the research department for various different companies, and at AvaTrade, I look after the entire research on a daily basis. So the research notes that you may or may not be reading on AvaTrade's website, they are all written by myself. And if you are not reading, folks, please make sure that you do, because there is a lot of important information in there. And I highly encourage you guys to take this opportunity to understand what the market is really doing and where the opportunities are. So that's a bit about myself. Now it is about you guys. So in a series of 3 questions, my first question to you guys is, please say yes if you have been trading under a year. Okay, great. And the second one is, please say yes if you have been trading over a year. Fantastic, fantastic. So the final one is, please say yes or no if you have attended any of my previous webinars. Fabulous, fabulous. Someone is saying several. Julian, I appreciate your time. Thank you. Folks, this is your opportunity really to learn. Earlier today, I had live YouTube session. So on YouTube, this was your opportunity to ask me as many questions as you can, because I was explaining why the market is going down or why the market has started to bounce back up, and what is the strategy and the indicator that I was very much focused on. So it was a bit of a combination of fundamental and technical aspects with a punch of quantitative and qualitative analysis there. So that is exactly we are going to do over here in this particular webinar, because I think given the massive sell-off that we have seen in the stock market, I think right now there are really big opportunities which you guys can really take advantage of. As always, the first thing first, it is important for me to go through this slide of disclaimers and risk warnings. So anything which we'll be discussing in this particular video cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. Now, the most important thing is that if you guys like to contact us on a daily basis, right? And if you like to interact with us, the best way of doing that is through Twitter. I am very active, and this really gives you an opportunity to ask as many questions as you can. And I know a lot of you guys are already doing that. But first of all, why it is important to be on Twitter. As always, I cannot stress enough the importance of that, because the moment that you see that 40 pip up or 40 pip down move in a Forex market, or even more than that, and the same for stocks and commodities, guys, those moves are primarily because of some fundamental news which really moves the market. But the question is that what is that news, and where can you find that news, and how can you really stay up to date with that? Well, you can obviously go to any of those tier one media channels like CNBC, Bloomberg, right? And speaking of that, I will be on a CNBC 3 p.m. UK time later on today. But the most important and efficient way of getting that news is through Twitter, because obviously it takes a lot of time for any of the media companies to write the stories and then get it out. Before you get that, the move you would already see the move in the market, and perhaps you will lose the opportunity. So if you are in a market and you wanted to know why that market has moved all of a sudden to the upside or to the downside, the best way to know that is if you are on a Twitter, and if you are on a Twitter and you can just get the notifications directly on your mobile phone in terms of notifications. I'll show you all of that. So my Twitter handle, folks, is right in front of you, which is Naeem Aslam 23, and for AvaTrade, it is AvaTrade. And in addition to that, on a daily basis, I post 2 videos on daily fundamental videos. So go and have a look at that. And then for those slightly more sophisticated investors, I also put technical videos as well. So let me go out and let me discuss where exactly is that, and then how can you really find us on social media. Now, with respect to my Twitter, and I'm going to show you that in a bit, just over here, you can see that is the Twitter handle right over here, and you can see pretty active with that, talking about what's going on with the UK's job market, and really a lot of information, valuable information for you guys in terms of videos and everything else with respect to that. So this is really your opportunity to get involved, get all the analysis directly to you, and if you are unsure about any of the news which is really posted, then feel free, to ask the questions, and I'll be more than happy to answer all of them. Similarly, when you follow AvaTrade, please make sure that you are following the right account, which has this verified Twitter account tick sign, because you don't want it to follow any of the other wrong accounts. So again, this is quite an important one, and you get all that information throughout the day. Now, in terms of AvaTrade's YouTube channel, all you gotta do is go to YouTube and then go to AvaTrade. In here, you have daily analysis, the videos. In terms of a playlist, you can just click on a playlist, and then you will see everything. So fundamental news, daily news, technical news, webinars that we've carried out, so you can you can really see everything there and then. So it is quite an easy one for you guys to navigate through on a, if you like to do that. And then here is a session earlier that we were holding in relation to Q&A. Again, quite an intriguing one for you guys if you kind of wanted to pay attention to that. Now, let's go back to our agenda, and then let's see what exactly is on the plate for us today. Now, in terms of agenda for our market, what we're going to do is we're going to measure the strength of the indices, because if one thing which is very clear for the last few weeks is the market has been in a major downtrend. Only recently, since yesterday, we have seen this change in the direction of the trend, and that is where the opportunities are. And this is what I kind of want to discuss with you, where those opportunities are and why these opportunities could be very important for you guys. Now, the second thing that we kind of wanted to discuss with you is measuring sectors. So we will look at which sector is really performing the best, which sector has performed quite well over the period, where are we seeing the momentum in terms of sectors, and which index is really kind of important with respect to that. Now, special stocks under COVID-19, we're going to discuss that what stocks I am really looking at in terms of your streaming, in terms of your airline, pharma, online retailer, energy, and of course banks. All the names are right in front of you, and I will try my best to go through as many stocks as we can throughout this journey. Now, let me bring out the MT4 platform, which is quite, I'm sure that all of you guys are well aware of this MT4 platform because it is very, very famous to begin with. Now, what we're going to do is we're going to measure the strength of the indices to begin with. Now, in order to do that, what we're going to do is we've got to go onto the weekly time frame. This is where your weekly time frame is, right? So if you're looking on that, so there you go. So you can see this is your weekly time frame. What I'm going to do now with respect to the indices is, first of all, let me just, sorry, give me one sec. Okay, what I'm going to do is I'm going to zoom out a little bit. So what we see in front of us, this is your S&P 500 index. This represents your top 500 stocks over in the United States. We see right over here, this is the top which the market formed before the coronavirus stock market meltdown. What do I mean by meltdown? I mean this particular move when the stock market literally dropped and came into this area of support. This is where the support was, right? The big buy orders were sitting right over here. Now, after that, what happened is since the market fell into this one, the market went straight back up and it made a new high, which was higher than this particular high. So that is quite an intriguing one. And that is exactly what we mean in relation to, where the markets were, where the markets are, how the meltdown has happened, how the market has moved higher. Now, when we are talking about the strength of the index, when we are looking at which index has performed really well, for the S&P 500 index, we have three reference points. Number one, this is your 50-week moving average shown in pink, followed by your 100 and then your 200-week moving average. These averages are nothing but just the actual price average of this. So this is your 50-week average price for this one. If you ever wanted to put onto your chart, all what you gotta go to insert indicators, then you go to trend, and then you put moving averages. Here you can change the period from 50 to 100 and of course change the colors, but keep the method simple. Just for anything, it makes things a lot more easier, and then leave everything as it is. So that is what we are looking at with respect to this particular index. Now we know that yes, we are trading to the upside, and this index, has been pretty good. But when we look at the daily time frame, what we see is that this index, this S&P 500 index, is trading below the 50-day moving average, and it came and it touched its 100-day moving average right over here. Now it is bouncing back to the upside. Okay, so it is weak because it is trading below the 50, but it is trading still quite above the 200-day moving average. So that for us is a very positive sign, right? So now what we're going to do is we're going to do exactly the same analysis for the other two US stock indices. So we will begin by looking at the Nasdaq Index. Again, I'm going to go into your weekly time frame, and what I'm going to see from here is that an important factor is to note that in this one, that yes, pre-COVID, for this particular stock index, what we had was the price forming a high over here. But look at the new high. The new high is a lot more higher than the current high. It is much bigger, because for the S&P 500 index, we didn't see this much of a movement. Clearly, this index has been performing a lot more better. Secondly, when the meltdown happened, the price did cross the 50, the price did cross the 100, but it never crossed below the 200-week moving average. This is not what we've seen with respect to the S&P 500 index, because when I go to the S&P 500 index on the weekly time frame, what I see is something very different. Let me get rid of these markings because they really don't make sense. Because what we see is that the price moved much lower than the 200-day moving, 200-week moving average. So confirming that, okay, now we have a clear answer that the Nasdaq is the index where we have the biggest momentum. And if there is any pullback, this is the index which is likely to move to the upside well before than any other index. So let's go have a look at if there was an opportunity with respect to this particular index in the last few days, in the last recent sell-off. And when I say the recent sell-off, I am really referring to this particular movement, the movement which started after the stock market formed its all-time high, and then the stock market crashed after that. This is the particular movement that I'm really looking at. Now, when I look at it, I see that just like the S&P 500 index, this comes near its 100-day moving average, because obviously we are on the daily time frame now, not on the weekly time frame. So the price has started to move back up. Now, if you are a momentum trader, if you like to take, if you think that, I wanted to buy the best index, obviously we know Nasdaq is the best index, and then that is going to move higher. So you buy this one. But for the time being, what we're going to do is we're going to wait for this to move to the outside of this particular zone. So now we know which one is the best index, and we also know which one is the weakest index. We know the strength of the different sectors, because Nasdaq is pretty much your tech sector. That's all what we we already know that this index represents your tech sector, but S&P is overall index. So what we're going to do now with respect to the market is, now we're going to go and then look for individual tech stocks. We're going to look at if there is an opportunity within those individual stocks, right? So let's begin by looking at Tesla first of all. See if there is an opportunity with Tesla stock. Now, what we see is, you probably see on your chart that the price was trading in around that 2000 mark, but then after that, there's a huge plunge to the downside. Price went all the way from 2000 to 400. That is actually not true. What happened over here was there was a stock split. So after the stock split happened, stock splits do happen, and that means for every 5 stocks, you get 1 stock, and then the price obviously changes. So that is why we've seen this drop. So nothing really happened on the fundamental side, which was really poor. So that is what we got to keep an eye on. But when we look at the price action for Tesla on our weekly time frame, and I really don't like to look at this particular chart, so let me just bring out the chart for the Tesla on my Bloomberg platform, because that is where we can do a little bit better analysis in terms of a chart. So there you go. So the chart is in front of you. Now, what we see in terms of this is that, yes, the market is trading clearly to the downside once again, because the price was trading in around 500. Now it is gone to 424. So this chart has already taken account of all the stock splits, so you don't have to worry about. So what we see is we see the market breaking its downward trend. How so? First of all, let me change the color of this pencil so that we can clearly see it. First of all, what we see is that this downward trend line, if we just draw a downward trend line over here, price has broken out of this to the upside, which is very, very positive in terms of this market. Secondly, the price came very close to its 50-day moving average. The concept remains very much the same for everything, the 50-day moving average, and in terms of a moving average. And after touching that, it moved back up. But when it did move back up, it went only up to 450, just fell shy of its all-time high, which, after the stock split counted everything else, which is 500. So still a large momentum came into the stock market. And ever since, the price is still holding on to its gains as it is trading within this consolidation zone. Now, the only momentum that we kind of wanted to see is for the price, if it comes, okay, it can come and it can retest this 50-day moving average. But the important thing for Tesla is to break out of this is consolidation zone, meaning break out of 450 and then move to the upside, challenge its previous high, which is right over here for $500. And the moment that it will cross that, that will mark another bull run with respect to that. Similarly, what I'm going to do is I'm going to bring out the Apple stock very quickly, because Apple also had a stock split, and Apple also belongs to your Nasdaq. So that is what we are really looking at. So what we're looking at with respect to Apple is not as strong as the other Tesla stock, because right now this is still trading to the downside, very much so. We don't have any break of the trend line. We don't have this breaking to the upside. In fact, what we do see is more recently the price crossed below the 50-day moving average on a daily time frame, which was very, very weak, very bad for the price. But it stayed above its 100-day moving average, which was trading right over here. And as of yesterday, we saw another bull sign, which was that the price crossed above its 50-day moving average. Remember, the rule of thumb with respect to the stock price is that especially when you're dealing with the moving averages, is that the moment the price cross above an index, above a moving average, you go long. With the moment it crosses below that, you go short. So over here, when it went down, so you would have gone short, but then that was a fake breakout. The market quickly moved back above the 50-day moving average, and since it broke above that 50-day moving average right over here, look at the rally that we've seen for Apple stock ever since. So now we are seeing the similar price action for Apple stock. We are breaking back above the 50-day moving average, and if it continues, then it is very likely that we will go and challenge the previous high, which was right over here in around that 114 mark. So this is a huge opportunity, because right now the stock price for Apple is at 111. Now, let's go back to our terminal. Let's go back to Facebook stock, because that is what we kind of wanted to also look at in terms of that. So what I'm going to do is I'm going to look for Facebook stock on my terminal, on my MT4. So right by scrolling up and down, or maybe I will have Facebook over here. So give me a second. Actually, Twitter is again another quite an interesting stock that perhaps we should also look at, because as the momentum is building up, yesterday Twitter stock performed really well. Again, it is very much of a Dow Jones story, the Nasdaq story, where this is one of the leading stock which is moving to the upside. So what we see in terms of this particular stock is that yes, we've seen a very, very brief movement to the downside, which happened because this is a weekly chart, which happened 2 weeks ago. But after that, since yesterday, the stock is really climbing and tearing to the upside. And I'm really referring to this particular price action. And then 2 weeks ago, we were talking about this particular candle, which made a low right over here. The price came into this area. Sorry, let me just get rid of this drawing. Let me just draw a little bit more nicely. So the price came into this area of support right over here, and then it had a retest. The price retested it right over here, as you can see. And once the retest happened, the price started to move to the upside. And ever since, the price is moving to the upside. Now the next retest for this is right around this price level. If we break out of this one, the next level of resistance is going to be right over here. In terms of your exact price levels, what we're going to do is we're going to bring out the cursor, and then this one shows that the high of this one is at 45.83. But first, we're going to break the high of this particular candle, which is at 44.07. We break out of that, then we go right into the high of this candle, which is 47. So we have quite a number of different resistance level. This is number 1, this is number 2, and this is your number 3 right over here. And I'm talking about this particular price action right over here. So you can see that the momentum, the overall trend is very, very strong. It is trading to the upside. It is right over here. You can see this one. This is a very, very strong trend. That's why I quite like Twitter in terms of its a tech potential. Now, what about banking stock? Because we are really coming close to this session, so we got to go and then look for those banking stocks as well. So when we look at Bank of America, the weekly chart for Bank of America, what it shows is there is still a bit more weakness going on with respect to the weekly time frame, but we are off the lows which were formed right over here. Now we have formed another higher low, and perhaps there is a possibility that the price comes and it tests this particular level. If it does and it doesn't fall to the downside, the next move is going to be to the upside, meaning the price could test this resistance level as the first one, and if it passes that, then the next one is going to be near 28. If it passes that, the next one is going to be the all-time high. That is what we're going looking at. But before that, the price can really also come into these areas as well. So quite a large number of different resistance levels, but they can all work only if the price kind of continues in the direction that kind of we have mentioned right over here. Now, quickly, we're going to look at let's say Goldman Sachs, or shall we look at Google, or shall we look at Walmart? What I kind of wanted to look at is Boeing, because Boeing is quite an interesting one. This is a high risk, high reward stock, because it is still very, very much down so far this year, and I think that the chances are that the stock may actually revisit this low, which was formed during the stock market crash when S&P touched its lowest level. Right now, the hope is that this will bounce from this area of support, which is 140 to 146, but it is very much so maintaining its downward trend. So first of all, it's got to break out of this downward trend line to the upside. If it does that, then the chances will be that the price will come into this area of resistance, which is 226. That is where it is also going to meet its 50-week moving average, which is going to produce a lot of pressure, the selling pressure. But if it breaks above, if the stock comes and then it breaks above this one to the upside, then really at the time it will be confirming that, look, things are really improving. So once again, to summarize, the downward trend line is the first one that we're going to break. After that, the price will continue its journey, more likely to continue its journey right over here. If it does that, then the next journey for the stock price is going to be its 200-day moving average. And then if it crosses that, then the next journey is really going to be between 350 and to 331. So a lot of upside for the stock in terms of risk to reward ratio. In terms of a risk, this is the area which I think it is likely for the stock to touch. But before that, it is also likely that the stock will touch another support zone, which is going to be just in around 120 mark to all the way to, let's say, between 110. So this is the area. If it breaks this one, it can come into this area of support. So let me just have a quick look at questions, how you guys are doing that with respect to the questions. If you have any questions, feel free to shoot some of them before we call it a day, because the day, the session is pretty much over. So, okay, I suppose you can always interact with me. Tips on risk management. Okay, we can do some masterclass on a risk management in the future, but right now, don't risk anything which you can't afford. That is the biggest tip of everything. All right, folks. So please feel free to to go back on over here. Again, I'm just gonna re-emphasize the importance of Twitter. The handle is right in front of you guys. I can bring the Twitter again for you. Just make sure that you guys kind of follow us over there and then interact with us, ask as many questions as you can, and I'll be more than happy to answer all those questions. So, all right, folks, that's all for today. Happy days, and I'll see you guys next time.